YouTube, please give me a moment while I connect to Facebook. We'll be getting started shortly here. And I think we should be live on Facebook. What's up, everybody? Welcome to the Strategic Swing Trader. I am Sami Abu Saad, Director of Education at T3 Live. Hope you're doing well. We'll be getting started shortly by going over some swing ideas for next week and by analyzing the market. But before we do, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. If you'd like to download a copy of my free ebook, link for that is in the description below the video. I also dropped in the description of the video below, I also dropped the watch list that I'm going to be going over. So make sure to go to the description, copy and paste it so you don't have to type it up from scratch. All right, with that out of the way, if you find benefit in today's video, I'd appreciate it if you hit the like button. That helps support our channel. And if you have any questions for us, reach out by emailing customer service. info@t3live.com. info@t3live.com. So we'll go over the market first. As you can see, we had a nice rebound in the market last week. I wasn't really expecting it. I was expecting a sideways move on the market. Let's take a look at the weekly chart. I was expecting a sideways week basically on the Qs, and we had a nice bounce. Let's see, is my numlock key not working? Okay, there it is. So we did have a pretty decent sized green bar, and we had a nice bounce last week, and we are at the declining 20 now on the daily chart. It's not exactly a nice 45-degree 20 MA like we had back in April or May. It's more flat, so prices don't have to react to it like they did back there. It doesn't pose as much resistance, so we could move up to there. That will be where the most of the supply is, in this area. We could, but we don't have to. We're in a downtrend. We've moved up a good amount already. We could I don't know what the market is going to do tomorrow, but we could also, this could have been enough to start the pullback. My gut feeling is that we will move up one more time, one more bar or so, and if we gap up tomorrow, this will be a novice gap, which will more likely than not to get sold. More likely than not to get sold. So one more time again, just to recap, we have more room to go, but this is a downtrend. We've moved up a good amount, so anytime now the move up might be over. We don't have to make it to resistance. Sometimes we do, sometimes we don't in a downtrend. If we do gap up tomorrow, then I expect the gap to get sold, and I will be probably taking profit on some of the swing long plays that I have. But we don't have to necessarily, if we still have room to go. We don't have to necessarily come back down tomorrow. If you look at the hourly chart of the Qs, we just had a breakout at the end of the day. The SPY is the same relative weakness. It hasn't crossed over the 200 MA, and the Qs has. And then the IWM is showing the most relative weakness, but it's also the prettiest. Look at the base breakout right here that's just forming, and so it's well below the 200, which means it's showing relative weakness compared to the Qs and the SPY. So again, market still has more room to go, but at any day we could start the drop again. That's what I'm expecting. I'm sticking with the long-term downtrend, and what would signal the end of the move up here is either a strong gap up tomorrow, that would be considered novice in my opinion, or just just breaking a breach of a prior bar's low on the daily chart of the Qs or the SPY. So if we take out a prior bar's low, that would signal the reversal. Okay, so that's what I would be looking for, either a gap up to get sold, or if we take out a prior bar's low, then I would start to look to play short. Here's the watch list, mostly bullish and mostly breakouts. We've had a lot of these last week that did really well, So here's some more, but the problem with the longs, there's one big problem. The timing with the market is a little bit off. Market has already moved up, so to be starting long positions now is a little bit late. Okay, so that's the only issue. Otherwise, the list is beautiful. I like the ANGN long over 204. Stop just under 180. So it's about a 25-cent stop. Target, plenty of room. To the 200, let's say 350. Plenty of room. But the issue again to keep in mind is you have to be picky. I wouldn't take all of these because the timing with the market is a little bit off. Okay, ATHA, this is a gap fade, what I call a gap fade, when you have a large gap down and then the stock starts to break out. Now this thing hasn't broken out, and I like it when the 20 comes from underneath and then starts to, meaning I like it when the 20 flattens out and then you get the breakout. Example, PRAX from last week. Okay, we're in it, it's an open position. So I like it when the 20 goes flat first and then breaks out. So this is well in the money. Doesn't look like it's moved much, right? Oh, it's moved a lot. So the same on the ATHA. It's good, but not as good as the PRAX. So ATHA over 284. Stop under 250. Okay, over 284. I thought it was 284. 283. Stop under 253. 30-cent stop. BKSY is a daily buy setup, sort of. Hourly base breakout. So the entry would be over the base, stop below it. And target 1, and maybe even the 200 MA on the daily chart as target 2. Okay, that's a BKSY. CBIO is a base breakout. It's a very nice weekly chart. If you look at the weekly, that's beautiful. Needs to take out 161, long over 161, stop under 133, 30-cent stop also. CHGG, I'm in the Netflix, but this one, it's similar. The CHGG, at least on the daily chart, looks better than Netflix, okay, because it's already above the 20. So here's the CHGG. I like it. Look at the hourly chart also. It's a base breakout. It just needs to take out 2003 or so. Stop under 1820. Okay? So it's about $1.40. Is that right? $1.80. $1.80. Like it higher. And I like it more long-term than not. Okay? Again, a lot of these transition A plays where the stock is in a downtrend, the 20 starts to flatten out and then to point up a little bit. That's called a transition A play. Here's another one that I'm in, Carvana. Okay, I don't expect it to go, to the moon, but see how the 20 flattened out. Here's another one that I'm in and the newsletter's in, ZM. Neo is another one. I talked about Neo in last week's video. If you took, nice job if you took. So you see how the 20 was declining and started to point up. Here's another one that I'm in, but this is a tough one because really as a swing player, that's target. The 200 MA is mostly my target when I'm playing that transition A play. So it's already a target, but it's showing incredible relative strength to the market that I feel I want to keep it long term. And it doesn't look so good on the monthly, but I got it at 27 something. I don't remember the exact entry, so somewhere down there. But it's already kind of a target as a swing play. As a long-term play, obviously, you want to hold it to 50 or so, which is where the resistance is, 55. Okay, so this is a tough one for me. But I have a lot of those transition A plays, if you want to play them. I like a lot of these, but I'm not going to play... I'm passing on most of them, just FYI, because I already have a bunch. And the timing with the market is a little bit off. CRIS 116, stop under 99. I thought it was 99. 94. So over 116 by 94 cents. Target $2. That gap fill right here. Okay, it's 225 actually. DCPH already broke out. If you look at the weekly chart, you know, it's already broken out, so a little bit late, but we have kind of a red bar ignored, a ribby. So long over 14.50, stop under 13.38. It's $1, $1.10, $1.15. Okay, and has plenty of room, no resistance. GRPH, that transition A, it's like, you know, holding the baby. You know, that's what that's what it looks like to me, holding the baby with the right arm. So long over the base, target around $4. So a good amount of room. The NLTX, another transition A, long over 116. I'd give it to 99 cents. I confused the NLTX stop with the CRIS. CRIS stop is 94 cents. The NLTX stop is under 99 cents. And they both have the same entry, which is, this one actually is 117. You gotta put the entry over that bar's high. CRIS, the bar's high is 115, $1.15. So just similar entry, just 1 cent difference. PAYA I like a lot because it had a gap, broke out, and it's been basing more or less. So if you look at the hourly chart, that's not bad. Over the base, technically speaking, one can put the stop just under that ribby, under the red bar's low. But because it's a little bit late with the market, as I said several times already, I'd give it more room to here. Okay, what if I'm wrong about the market and the market keeps going? Maybe comes in a little bit and then keeps going. Let's say I'm wrong about the market. Then you don't want to get shaken out. So I recommend giving it room to the pivot, which would be 639. Under the stop would go under 639. Okay, RXRX a little bit late, but has a ribby over 940 by 820. Target about $12 or so. That resistance. It's actually 1130. TCRR, another transition A. This one is a little bit 2-3 green bars in a row, so it's a little bit late. I'm passing on it, but it's just going to be a watch. Top. I like how it retested the 20, and the red bar turned into a bottoming tail bar, so that's bullish. It just now needs to clear 750. If it can clear 750, then it should be higher, maybe to 10, maybe even to $12. Okay, depending on the market, what the market is doing. But I like it higher. And then VEDU is a little bit interesting. We've had a lot of these bases at the bottom that broke out and exploded. Here's an example, PEV. Same exact thing. Went public, dropped, based, and then, it went up, I don't know how much. In just a couple of days, went up in 1 day or one day, I think, went up over 300%. Not just the PEV. There were a few more. MPLX maybe? No. MPLN? I forget the symbol now. It's fine. Whatever. So this one looks similar. It's not exactly the same, but has an hourly buy setup. So long over 203, stop under 166. Okay, and then hold on for dear life. I don't know how much it might move to 5. It might move to 10. Okay, I played I think TBLT. Okay, TBLT. This was an 80+% gap. Okay, same concept. It had a nice base. I called it in the strategic day trader room because it came up quickly as a long over 166. I think this bar's high 166, and then it gapped up. Like I said, 80% and moved up a nice amount, but got a gap right to the decline 20. So that was target basically. It's similar to the B chat, which I didn't play, but same thing. The day before, based and then gapped and then ran up a lot. Now, you have as a trader, you have to spot and recognize patterns. So, and the market environment, like you have to recognize what's currently working, what's happening. Is it the base breakouts that are working? Is it the pullbacks? What is it that's working? Is it the China stocks? Those at the bottom. Oops. Yeah, the CWeb, the yen. Those are the leverage ETFs for the China stocks. And right now, the China stocks are doing pretty well. So I have both of these, but in my IRA, not in my swing account. the CWEB, and the yen. And I also have the NEO in my IRA account, and in my swing account as well. So I like some of these China stocks. I have the BILI or BILI in the swing account, and I still like it over the base. Stop under over 28.50. Okay, stop would be under 26. FINV is also a base breakout. Over the base, over the SPARS high, whatever it is, 487. Stop under 450. IQ is also another open position. Okay, so there's a few China stocks that I really like. I like the RLX. It's a base breakout if it can take out the highs, but I wouldn't even wait. Long over 238. That's 237. Over 237. Okay, stop under 216. Target the 200 MA around 325. Let's just say. TIGR looks higher too. TME looks even better because it hasn't been moving up as much, so it has a base. Long over $5. Let's just say. Stop under 450. 50-cent stop. Target $6. Or it might be a long-term play also, like I think a lot of the China stocks are. I had the VIPs. Stupid me, I trailed out. Tight. I don't know where, here, or I don't know where I trailed out. But I trailed out. Long over the base, stop under it. Looks higher still, much higher. ZH, also another transition A and a China stock. So over the base, stop under it. This looks higher to $3, maybe even to $4.50. Now, whether it gets to $4.50 or just to $3 and rolls over will depend on the market, what the market ends up doing. If we start to collapse again, then yeah, these will, you would look to exit at the first target, or you'd look to trail. If the market holds up and this ends up being a medium term, maybe even longer term bottom, then you can hold these long term. Does that make sense? So what we do as traders is highly dependent on the market environment, what the market is currently doing. I often say to myself, oh, how much easier trading would be if we didn't have a market index, if stocks didn't follow each other. I know that would be impossible, but if everything was on its own page, if every stock just behaved on its own page, it'd be so much easier than having a market index that most stocks basically follow. All right, so that's the issue, and we have to constantly adapt and shift a little bit based on what the market is doing. Onto the bearish list. I wish I had a slightly longer list, better ideas to pick from, because like I said, I'm expecting the market to come back in a little bit this week. But here's some ideas that I like. DWAC. Broke down. I wish I got it this day. Not this day because I wasn't aware of it, but I saw the gap that day and I missed it the next day. But it would have been so nice to get it short under that doji bar. I didn't, but now we have a breakdown and a base. So under the base short, stop above it. If we also look at the weekly chart, we have a 1, 2, 3. Now this doji bar here that you see on the weekly time frame, it would have been more ideal. It would have been better if it formed right at the bottom. Then it would have been a tighter stop because the entry is under the big red bar's low. Stop above the doji bar's low. Now, if the doji bar was slightly lower, then you would have a narrower stop, a smaller stop. Target is $10 or so, where it came from basically, on the DWAC. I like it a lot. And next on the list is the FRGE, which is a daily sell setup, but it's not moving very much, but it looks lower. So short would be under 1075. Stop over 1220. It's a big stop. HAIN, very weak, but since it printed a wide range red bar on Friday, I'd wait for a 1, 2, 3 first. I'd wait for a doji bar first, but it looks lower. LYLT looks really weak. Looks lower. I wish we had a straight rather than a slanted base. It's been selling off the last 3 days or so. So, that would be the only issue with it. Short under the lows, stop above the pivot. MVST is a daily sell setup. It doesn't have a ton of room to the prior low to here, because the prior low, when you have a counter rally and a sell setup, should be target 1. So it doesn't have enough, it wouldn't make enough reward to risk if we were to exit at the prior low, but I really like it lower. So short right here, stop up there, and then just manage it on the way down. Okay, so that's the MVST. NRDY and NRDY looks all right. This is too strong of a move up, I think. So, but it's interesting, weekly sell setup right at the declining 20. So again, another sell setup off the weekly chart. I'd say short under 266. Okay, stop above this bar's high, which is 295. 30-cent stop and target the prior lows. And then SES is a sell setup also. It triggered already on Friday, so the entry should have been under 463, so it should already be in it, but I don't think it's too late. Under 455, stop would be above 511, and then target one the prior low, and then, you know, for the back half, you would hope that it goes through the prior low. Initially, again, you get a reaction when it gets to the prior low. Notice here, we got some kind of a reaction, and then it continued lower. So that's what I'd be expecting, is to get some kind of reaction maybe, and then lower still. But everything will depend on the market. So just keep an eye on the market and make sure that you're not playing against it. Okay? And with that said, that will do it for today. I hope you enjoyed today's video. I only notice these things after I start talking. I noticed that I'm a little bit slow, so I appreciate you sticking around until the end. If you have any questions for us, reach out by email and customer service, info@t3live.com. And if you would like to learn more about what I do, links in the description. Thank you so much, and have a great trading week next week. Take care, everybody. Ciao.